Lisa, what is your read on the U.S. consumer? As Taylor said, it really has sustained the U.S. economy. Do you see cracks in the U.S. consumer at this point?
So we continue to see the U.S. consumer as very strong. To Chatham's points, however, we do see some slowing in the data. I think our caveat, though, is that really it's off historic highs. So if you look at some of the employment indicators, for example, we had readings 99th percentile, 100 percentile relative to history. And while, again, maybe those are dipping down a few percentage points, and we want to monitor that, again, it's off absolute highs. And so overall, we continue to believe that the consumer can continue to bolster the economy. And again, when we look at our broader set of indicators, it's a similar story. Again, starting at lower levels than what I was just citing on the employment market. But again, while there are some downdrafts in the data, the absolute levels are really okay. And so we look at the U.S. economy as really decelerating from maybe 75 miles per hour to 55, but still in decent territory.
So, Chetan, what about that? It may be coming down, but it's coming from a pretty high level when you're talking about labor force, and so we may not be in so much trouble.
Well, I think the momentum is what I would look at. It looks pretty worrying. And also, when you think about the framework, why the momentum has been lost is because CapEx is slowing. I don't get any confidence that the corporate confidence will recover from here. It only looks like it will deteriorate further. So you will see deterioration in the CapEx outlook, you will see deterioration in the job outlook, and therefore, in that context, you will see further impact on consumer. And one thing that I must highlight is that, this is a cycle in which the leverage is in the corporate balance sheet, not only the U.S., but other parts of the world too. But particularly in the U.S., the leverage is in the corporate balance sheet. It is funded a lot through non-banks, i.e. it is through securities. And at some point of time, this continued slowdown and impact on corporate confidence will become nonlinear. And that's the time when you really have to worry about what happens to corporate credit outlook as well. So, for example, if you were to see tariffs increasing to 25% on the balance 300 billion of imports, we think it could have a nonlinear impact on corporate confidence in terms of their decision making. They could actually then start to take up job losses, and that will then have a significant impact on the corporate credit outlook too. So I think we also have to keep in mind that it's hard to predict the timing of when this non-linearity occurs, but the risk is still underlying there. And so we are conscious of that recession risk because of that.